Hello everyone, welcome back to my channel. So today I feel like talking about the capital gains tax because I did a video a couple of days ago talking about it, but I want to get a little bit more specific this time. Last time I just talked about how people who are able to capitalize from the pandemic shouldn't be upset about paying an extra couple of percentage points due to this capital gains tax, because many years in history people paid 60 to almost 80% in taxes. So for it to go from 21% to 28%, it's not that bad, people. Believe me, it could be worse. Before this increase, it was at 35%, and then it went down to 21%, and now it's going up to 28%. So we can't be too upset about that, especially when we were able to make a huge profit from this pandemic for those who invested in the stock market. You have to be mindful that this capital gain tax is on investors who decide not to hold their gains for a year or more. So for those who are day traders, for those who invested in GameStop and then decided to sell their winnings from the profits, those are the ones who are going to be affected from the capital gains tax. Those individuals who did not hold longer than a year or more. So for those individuals who day traded, those individuals who bought on margin, option trading, you name it, for those who bought and sold, and bought and sold again, those are the ones who are going to be faced with capital gains with this new tax increase. For those who hold for a long period of time, their winnings are the ones who are not going to be as affected, penalized as much as those who are pretty much cashing in and their winnings and not holding for the long term. Because on my channel, I'm a long-term investor and not a fly-by-night, not one of those individuals who buy and sell, day trade, and think that they won't face some type of penalty for getting these large, huge gains, right? So basically, I have a video from CNBC talking about those individuals who they feel this year made $1 million, but the next year around they may not. So they're feeling sad that they may have to pay extra in taxes on $1 million. So I have a video to show you in a few minutes, and also a video from Market Watch article that is on Warren Buffett, where he talks about how the wealthy, the 1%ers, should pay more in taxes, not the working class, not the middle class. So I'll show you both of the video and the article, and put a comment down below on if you are deciding on cashing out before they increase the taxes. Are you planning on keeping your investment in for a much longer time, past the 1 year, so you can keep those gains? So put a comment down below. Become a subscriber, share this video with friends and family. Make sure to destroy the like button. Make sure you hit the new content bell for my latest content. And what do you think? Do you think that Warren Buffett is right, or do you think the ones who are able to make a substantial amount of money are right, and that they should complain, or should people just pay their fair share besides the working class and middle class for once? So just be mindful that not only the wealthy is going to be taxed, but the working class as well. But it all comes down to the amount of money. If you're making $400,000 or more, remember it's only going to be increased from 21% to 28%, not 38%. So you're not going to be paying that much. You'll still be able to keep some of your profits that you were able to make from this year, from this pandemic. So have a great day. Until next time, out.
Now, before you get all upset and start pulling out your hair, just be mindful that the capital gains tax is going to go up from 21% to 28%, not 38%. And mind you that before Trump, it was 21% to 35%. So just 7% more is not going to kill you. Also, I'm going to put a link at the bottom to let you know how much people paid throughout history here in the United States when it came to taxes. There were even some cases when people paid 60% all the way up to 80% in taxes. So you think it's bad now. Just look back and be thankful that you were able to capitalize during this pandemic. So here we have Market Watch. Billionaire tax will be simpler and smarter than a capital gains tax hike and other complicated changes. Warren Buffett famously noted in 2007 that his own marginal tax rate is below 20%, while his staffers' average exceeded 30%. And that's still true for some ultra-rich Americans. Their tax rate is far less than 20% today, while 18.5 million ordinary Americans face nearly a 40% rate. So the middle class, working class are paying much more than those who are at the 1% when it comes to the majority of wealth in this country. All of this will continue under any changes to the U.S. tax policy that President Joe Biden proposes, a persistent violation of what the Obama White House in 2012 coined the Buffett rule, that those earning millions should not pay a lower rate than those earning thousands. Buffett is centric. Propose a simple solution, an annual income tax without loopholes, of 30% on income between 1 million and 10 million and 35% on incomes above that. Buffett target for such taxes are clearly the ultra-rich, people like himself, from hedge fund managers and celebrity CEOs to star athletes and entertainers. This simple proposal has yet to be enacted, and Biden is not proposing it. Senator Elizabeth Warren, a partisan progressive, had proposed an annual wealth tax of 2% on the 50 million cohort and 3% on the billionaires. While bold and novel compared to America's traditional income tax, this would not raise furious fairness objection from the overwhelming majority of Americans. Even some billionaires endorse it, yet Biden is not proposing it. Instead, Biden proposes to increase the top personal rate on annual income above $400,000 to 39.6% from 37%. This threshold is far below any conception of the ultra-rich. Moreover, it's below $440,000, a current break point for higher capital gains rates. $500,000, a figure Buffett mentioned in supporting Obama's reversal of the Bush tax cuts, are $540,000, encompassing the top 1%. Why has Biden forsaken the simple targeted approaches suggested by Buffett and Senator Warren? Billionaires and other ultra-rich are powerful through a minority, and taxes such as Buffett or Warren propose will apply exuberantly without loopholes. Biden's political calculation is to portray such proposals as extreme, making his proposals seem moderate. Under this subterfuge, the ultra-rich win while millions of ordinary people lose. So hopefully, this time around,
these millionaire earners. Robert Frank joins us with the latest on that. Robert, good morning.
Good morning, Andrew. Biden's proposed capital gains tax is aimed at those with combined capital gains and ordinary income of more than $1 million a year. That's about 500,000 taxpayers, what they call at the White House the top sliver. But research shows those million-dollar earners are not the same people every year. The real number is actually far bigger over time. A study done by Bob Carroll at the Tax Foundation looked at million-dollar earners over a 9-year period. Now, more than half made the list for only one of those 9 years. Just 6% were million-dollar earners over the entire 9-year period. It also found that one-time capital gains windfalls were the big reason that many people made the list and also the reason they fell off. Now, a lot of those were so-called one-time wonders. These are people who made $1 million in 1 year by selling a business that they may have spent a lifetime or even generations building. Capital gains accounted for half of those one-time millionaires. The study concluded, quote, millionaires are a highly transient group of taxpayers, and capital gains realization is at least one reason. Now, since it won't be adjusted for asset inflation, the new capital gains rate would likely hit millions of taxpayers, not just 500,000, over the next decade. Guys?
You're making this tougher for us, Robert. You're making the issue tougher. When you look at those type of numbers, is there any way to build a tax to the extent you wanted to have a tax like this that somehow wouldn't capture the one-time wonder? Has anybody thought through that?
Well, I guess you could say you have to make that amount just in capital gains or, combined income over, let's say, a 2 or 3 year period. But again, there would be a way to game that system as well. I don't think necessarily that the goal or the tax is necessarily wrong or amoral or this is a reason not to do it. I just think you have to be more honest about what the numbers really are. It's not just a tiny sliver of 500,000 people. It's 500,000 people, many of whom change every year. So over a period of time, you're talking about millions of taxpayers. Just be honest about what the numbers really are and who that group really is. These are people that don't make that amount every year, but may just make it 1 year. Maybe it's fine for them to pay that tax. Look, $1 million in 1 year still makes you wealthy, at least for that year. But I just think, again, it's important to put real numbers behind this and explain who these people are and how they really make their money.
Shepard Smith here. Thanks for watching CNBC.